Hi, and welcome back to Office Hours with Dr. Doug. We're here with professional trader Charles Poliacof for our fourth segment of Inside the Trader's Mind. Charles, you've been a great sport. Thanks for trudging through all this.
My pleasure.
Today we're going to talk about managing your risk.
Okay.
Critical factors to success. We touched about it on part 2 when we talked about the mental game. Hopefully we'll get into more of that maybe in a bonus segment later. But right now, managing your risk. How do you think about managing your risk as a trader? And also, how do you go about figuring out to size your trades up or size them down as the market moves?
Before I even address that, I want to kind of take a step back.
Okay.
And this really pertains to anybody, whether your time horizon is a short-term horizon, a medium-term horizon, or you're an investor. But it's being a student of the market. Okay? And it's about understanding what's working and what hasn't been working.
Right.
And trying to figure out, the market is this complex adaptive environment, right? But there are these patterns that happen time and time again. So being aware of what's going on and learning from what you've witnessed or seen or experienced and using that. I've always recommended, and you and I have discussed this off camera, about keeping a journal.
Right.
Sort of like just keeping a track of what's been working for you, what hasn't been working for you, what you've used in the past. Now, to talk about risk, a lot of it I base on, sort of what's worked for me recently and what's not worked for me recently.
Right.
So, we've talked about other types of trades in the past. Let's talk about the reversion of the mean trade that I spoke about in the last segment.
Okay.
If I find that trade isn't working, I may continue to do it,
right,
but I'll bring my size much, much smaller.
Let me ask you a question right there. So how do you know that critical point of it's not working right now or it's stopped working, it's something that's going to start getting paid?
A lot of it has to do with, I hate to use a gambling analogy because I don't believe that trading or investing is gambling, but if you've ever sat down at a blackjack table and you can do no wrong, you'll sort of continue to press your bet.
Right.
It's the same thing with sort of trading. When things are working, you want to really try and push the envelope as much as you can, but still maintaining your controls and disciplines. It doesn't mean things are working, so let me just throw my discipline.
But wait a second. A lot of traders say to themselves, I'm up money, I don't want to give it back, I'm afraid, so I don't want to press when I'm up. I want to start to get conservative and hold it back.
But are you abandoning your discipline by being afraid?
Well, obviously as a trader, that's
the answer is yes, then you're doing the wrong thing.
Okay.
You have to be as robotic as you possibly can. As soon as you become emotional with investing or with trading, it's game over. I can name you times. There have been several times in Warren Buffett's career that he's been down 67% on his portfolio. I don't know what happens behind closed doors, but these people continue to maintain their discipline. So it's the same thing with a professional trader. You have to maintain your discipline.
So to keep we've talked about discipline before, but to keep the emotions out of that game, would you say that and certainly as a coaching strategy, I have traders look at the objective analysis. Like a scientist, think about the process, the fundamentals behind the trade, why they put it on the first time, why they're still in it. And the question I have them ask themselves is, if I had nothing on right now, what would I do?
Right. And that's a very important question, actually. It's a good point to make, because one thing we didn't touch upon in another segment that I would like to touch on is when people lose their discipline completely. And that's because, let's say they had an idea, and they didn't pull the trigger because they were afraid.
Right.
Okay? So now the idea passes them by. So now these people are, they start dealing with emotions of frustration, regret, anger, fear of missing out, whatever it is. So now they start participating, they start getting involved in positions or putting on positions they normally would never want to put on before. Next thing you know, they're losing money in these positionings, they're doubling down, and it just creates this cascade of negative events that really results in a good deal of money lost.
Charles, I've known you for a long time. Thanks so much for doing these segments for us.
My pleasure.
We'll see if we can get a bonus segment. We'll talk about more of the mental game if possible. Not sure if we'll be able to do that. Thank you all for joining Office Hours with Dr. Doug with professional trader Charles Poliacof. 12 years of experience. Has been managing $10 to $20 million, consistent returns, one of the top traders on the street. Any questions or comments, please feel free to go to my website, drdoug.com, and we'll see you next time.